Nothing I share here is financial advice. This is all based on my own experience, my strategy, and how I see the market. You're responsible for your own trades, so always do your own research, manage your risk, and never trade money you can't afford to lose. This content is meant to help you learn and think for yourself, not to copy or follow blindly. Let's keep it educational and intentional. Welcome back, guys. Today we're looking at this chart. I shared it once before in one of my videos, and that's the PMI chart. Here I showed how nicely it correlates with Bitcoin, mainly in terms of cycles. Almost every time we had a top in PMI, we also saw a top in Bitcoin, and more or less the same applies to the bottoms. I've marked the tops and bottoms here, and I also marked the PMI cycle. The curve you see is the PMI cycle curve. We can see that in most cases, Bitcoin formed the low slightly earlier, while the tops varied a bit in timing. Another observation is that this time, we didn't really see the usual expansion to the upside that we had in previous cycles. Instead, since 2023, PMI has been almost flat or moving sideways. The structure is actually very similar to Bitcoin, where price was just grinding higher. I was waiting here for a move to happen sooner or later. And with this new month, we now have a new data point. We can see PMI starting to break out. If history repeats, that would suggest that Bitcoin could also see a move in the same direction. That's at least what happened in the past, unless this turns into a fake breakout on the PMI chart and it gets pushed back down next month. For now, it looks like a clean move, not like the choppy up and down action we saw before. So this is definitely an interesting chart to monitor going forward. At the moment, we have a breakout attempt, and usually that means Bitcoin follows in the same direction. For Bitcoin, we still need to see signs of strength. At the very least, price should not lose the local range. For real strength, we would need a break above 97K. With a bit of hopium, we could then see a similar move playing out on Bitcoin. So, if this chart is interesting to you, make sure to keep an eye on it. Now let's switch to the FOMC days chart. Here we were looking at the dates before and after FOMC. What we usually see is a reaction either before the FOMC event or at the event itself. For those who watch my videos, you know I try to give updates before every major event. This time, Bitcoin formed a weekly cycle low slightly before the FOMC meeting. After that, we saw a rise, followed by a drop into the event. In general, not always, but most of the time, when Bitcoin moves down into the event, we tend to see a reversal. Sometimes that happens right at the release, but more often it happens slightly after the event. As an example, I pointed out a similar situation near the highs around 49K. It wasn't exactly the same structure, but we also saw a larger move afterward that made a new low, very similar to the other example I showed. And now we're seeing a comparable situation again. This time, Bitcoin formed the low 5 days after the event. When I measure these situations, the usual window is roughly 5 to 8 days, which is where we would expect a reversed move if this was a trap move before a reversal. We might still see another local SFP, but after that, price needs to reverse. Otherwise, the move would already be extending, which would invalidate the idea of a news trap. If it really was a trap, then a move higher needs to happen sooner rather than later. The original plan was, of course, to long the range and get continuation higher from that level. On that idea, I was wrong. We got a new low instead. However, for now, price is still sitting at a higher time frame support level. Because of that, I'm not fully bearish or fully bullish. Yes, we had a bearish break, but at the same time, monthly support is sitting right below us. With that in mind, I'm still not letting go of the bounce scenario, especially given that the PMI chart is breaking out. We are in a good time window for lows to form after an FOMC move. We are still in a daily cycle low formations witnessing the sting. So for now, it remains a waiting game, watching whether price confirms a reversal or whether the move extends and forces a reassessment. Last time I showed you that just because the daily cycle is usually around 54 to 66 days, it doesn't mean the low has to form exactly inside that window. It can form earlier or later. We can see that the cycle length varies, and while we look at these dates, we also want to see key levels being hit, which did happen. However, price failed to make a new high. That simply means the low was not formed yet. At the same time, no one canceled the bounce scenario. Usually, it just becomes more tricky when price moves outside the average time window. In those cases, price can grind lower for longer. A good example is the last cycle, which took 81 days. During that move, we still had some daily cycle time windows along the way, but the price targets were not reached, so price continued lower. Only after 81 days did the actual low form. So with that said, nothing has changed in the cycle itself. It's just taking longer this time. Now, with the new month opening, the PMI chart moving higher and the post-FOMC dates also reaching the expected time window, this would normally be the timing for a move higher, either this week or latest next week. If that move fails, then it's simple. I go back to the chart and reassess which lower levels come into play next. For this month, I already showed the monthly statistics yesterday. February is one of the most bullish months, with 73% of the time closing positive. So based on all this information, what am I looking for now? We can see that price has already touched the monthly wick median, which by itself can be enough. If not, and we see another local low, then I would not like to see price move far below the monthly average bullish wick. Ideally, if we get another local low, it should either be an SFP or some kind of grinding structure, followed by a move up. If price starts to trade and close below those levels, then we would look for the low to be formed within the monthly average timing window. When we add the chart levels, we can see that they align very nicely with the averages. With that said, another local low would be fine, because it would still be right at a support level. But if price starts closing below it, then I would aim for the next lower level and the bearish averages. Until that happens, this area is support, and Bitcoin is currently bouncing from it. On the bounce, what we need to look at first are the SR levels, structure, and confluences. I've marked this SR level here. We can see that it was support during the previous range, and it aligns nicely with the bearish monthly wick area. That means, for strength on a bounce, price needs to move back above the previous low and above this level. That would put price back inside the previous range. From a range perspective, once price is back inside the range, it means the move below was a deviation, and then we would aim for the mid and the high of the range. At the same time, these levels are now potential resistance areas because they are the same levels I was trading from before. Now price is testing them from below, which is where we look for weakness or strength, depending on the plan. Keep these levels in mind. The first one aligns with the range low. The next one is the daily swing high, which would be the lower high area in a bearish scenario. For bearish continuation, you would look for a rise into that area, a local structure break, and then continuation lower. For the bullish scenario, I would want to see a weekly break above 97K. At that point, the monthly structure would remain intact, the weekly structure would shift up, and I would start looking for higher prices, with 112K as a minimum target. Of course, price can fail to do any of this. For me, this is simply preparation for different scenarios. If price moves in a strange structure, I'll adjust the plan and react along the way. We can't know in advance exactly how it will play out, so all we can do is prepare for the scenarios we want to trade. If something new appears, we learn and adjust. Okay, and now let's look at one more higher time frame chart with a bit of hopium. That's the crown indicator, which combines volatility and other factors. Based on your settings, it then prints these signals. Usually, these signals form near the lows or during the final move into the lows. My settings here are not perfect yet. They show a bit too much. This one here during the last bear market can be ignored. Normally, the signal would appear closer to the actual low, with some deviation. The deviation is not small, around 20% as it stands now. Don't take me exactly by the word here, as I still need to test it properly. But as it stands right now, it is showing a signal that usually appears at or near macro lows. So what I want to say with all of this is, yes, while the range broke down and it looks like a bearish move, a lot of other things are still pointing toward a bottom formation. Yes, price can deviate, but this is a higher time frame view. I know I was wrong on the idea that price would move up from this range, and I closed my trades from that range. But that does not invalidate everything I said before while price was trading inside it. I didn't close because of fear or because my overall view changed. I closed because the idea was invalidated. The plan was for price to move up from the range without a close below it, and we got that close below. So I closed the trade. Simple as that. For me, the fact remains that this does not look like a top the way previous tops looked. Most likely, the top is not formed yet, at least based on my data and observations. Yes, price has formed a top on the candles, but a lot of other things did not point to that. So for my confluence, if price moves down without having formed a proper top before, then I need to look for higher prices later. Sadly, that move is happening not from the range, but I'm also not complaining about lower prices. If I ignore my YOLO box trade, I'm actually happy to buy lower. And this lower might not be as low as many people think. Anyway, we can all have different views on this. You can make your own conclusions. I'm mostly just showing what I track. Other people track different things and might have reasons to look for 30K or even 20K. Maybe they know something I don't, or maybe I know something they don't. At some point, no matter what, someone will be on the wrong side, whether that's a bad setup that worked out or a good setup that failed. One more thing I want to show here is my older indicator, which is based on cycles and buy signals. I was tracking it on the daily time frame and also on other time frames. Here on the daily, we can see that it often aligns very nicely with the bottoms. Of course, price can still move lower after a signal and continue printing buy signals. But overall, if you were to buy on every signal, sooner or later it would turn into a nice investment with a good average entry price. Now we can see that it's starting to print buy signals again. That's simply because around 66 days have now passed. And from that point on, this indicator starts looking for buy signals once certain conditions are met. On the 3-day time frame, we see a similar situation in the past. Yes, sometimes it buys a bit higher and price moves lower afterward, but it also catches the actual lows. Overall, it's a solid signal. Now price has moved even lower, down to the weekly time frame. I didn't really use this indicator on the weekly before, but you can clearly see that it has caught the bottoms pretty well. In the first downtrend, it didn't print a signal, but that level still marked the low. The next time it printed a buy, and that was the low. And the last time it bought during the final leg down, which can still be a large percentage move, but on the bigger picture, those were all very good buy levels with a nice average afterward. Now price is hitting that rare level again. It hasn't printed a buy signal yet, but it is touching the level. Usually, that's the last phase, which can either form the low here or grind lower for a bit like last time. But as soon as it starts printing buy signals, that's where I will most likely add to my spot position. I'm already in spot trades and have been averaging down based on the rabbit box. I'll add more when those signals appear. This is not financial advice, of course, and all of this needs to be held over a longer period of time anyway. Now let's take a look at the momentum, and then switch to the local levels. 2-month time frame. Momentum is pointing down if price closes below 108K in about 25 days, so we'll check that again next month. Level-wise, on the 2-month chart, the next support is this order block that led to a new high. That defines the 2-month SR zone from 70K down to 59K, with the lower extreme around 49K. That lower level only becomes interesting if we get a close below the last low. If that happens, then based on this chart, the lower level would be the target. Monthly time frame. Momentum is down unless Bitcoin closes above 170K, which is very unlikely for now, but that's the number. As it stands, there is downside pressure on the monthly. We can also see fear creeping back toward the extremes on the monthly, but for a proper signal, we would need momentum to cross up, so we keep observing. For this month, 107K is simply too far away to be useful. 2-week time frame. Momentum is at the lows and would need a close above 84K within the next 12 days. We'll come back to this time frame later. For now, pressure is still down, but it's already at the lows. Looking at past examples, this often aligns with bottom formation, though it can take time. We're also starting to see early signals on the 2-week. Weekly time frame. Momentum is at the lows. Price made a new low, but momentum did not. So we currently have bullish divergence. That can change if price pushes lower, but for now, it's there. For momentum to cross up this week, price needs to move above 82K. That's an interesting level because it aligns with other things as well, the monthly average wick level and the local range low. So on the weekly, bears want to hold below 82K, and bulls want to close above it. That adds extra confluence to the level I already showed before. Momentum just reinforces that idea. 5-day time frame. Very similar situation. A close above 82K would clearly confirm divergence here as well. 3-day time frame. Momentum is finally coming lower. It still needs a close above 85K to shift. Until that happens, pressure remains down on the 3-day. We'll reassess after the next close. Daily and lower time frames. Same story. Momentum is at the lows. On the daily, momentum could cross up again with a daily close above 78K and ideally not below 77K. So overall, many time frames are sitting at the lows and just need a push to shift back up. Looking at everything shown before, the bottom should be close, at least enough to lead to a bounce. From there, we'll see how price reacts at the key levels. If levels are reclaimed, great. We aim for the next resistance. If price fails, we wait for the next lower levels, where more signals will eventually appear. Now let's take a look at the local levels. I know there are a lot of levels here, but these are bigger areas with confluence, and I need to be prepared for them because the monthly average move makes reaching these levels possible. Now, let's repeat the structure update. As mentioned, the monthly structure remains intact. Within this monthly uptrend, we currently have a retracement on the weekly time frame, which is in a downtrend. Inside that weekly downtrend, we also have a daily downtrend. So the conclusion is simple. If every lower time frame is trending down while the monthly trend is still intact, then the first thing we want to see is a higher low on the monthly, or in the worst case, an SFP. That's pure structure logic. It's a downtrend until proven otherwise on the weekly. It's an uptrend until proven otherwise on the monthly. For the bearish scenario, you want to see the weekly remain in a downtrend and eventually break the monthly structure. That would be your confirmation for lower prices based on structure. For the bullish scenario, you want to see the monthly structure holding. And then you want to see the weekly time frame start to shift. If that happens, we are basically back in a normal bull market uptrend until proven otherwise. That also means we would then have clear invalidation levels for the bullish scenario, similar to what we currently have for the bearish scenario, mainly around these structure break levels. Structure-wise, this is a bearish move unless we see a move above the key level, or we form another low and repeat the process. It's a tricky situation structurally, because on one hand, we are in a weekly downtrend and just made another lower low. But on the other hand, we are sitting right at the monthly structure swing low. Which one you give more weight to is up to you. For me, I was looking for higher lows because of other factors as well, not just structure. With that said, if price makes another low, I'll be ready. That would be a test of the monthly structure. It could even be a volatile move inside this area. We don't know yet. But in the bullish scenario, we would not want to see a close below that level, followed by a rise. If price starts closing below, then I'll aim for the next lower levels. If we see price rising, I'll aim step by step for the next levels. Those levels can be targets for longs, or if we see weakness, areas to look for reversal setups. That's the higher time frame view for now. Even though the move looks bearish, a lot of other things did not signal a top, and slowly but surely we are seeing more bottom signals flashing. A deviation is possible, but if we get a move back inside the range, then the probabilities increase to test higher levels. If not this month, then next month. If we see a deeper move into the monthly averages, I would look to accumulate more Bitcoin. For a new leverage trade, I'll stay patient, watch how price reacts here, and I'll update if I take a trade in the Telegram group. With that said, let's have a look at today's averages. First, I can see the 12H rabbit box setup gave another buy, so that's where I got filled. The target remains the same, around 95K. My average entry is now around 81K, and the last limit would be at 72K. That would be the final 12H setup spot buy. For this setup, I'm simply waiting for the target to get hit. My average would be lower if we make a new low, but as it stands right now, it's around 81K. This is not financial advice. Only risk what you can afford to lose in one trade. Now, is a move up to these levels possible? Yes. Based on the monthly averages, we could reach the next compound level and potentially even the target. That doesn't mean we will get it, but we know it's possible. Now let's move to today's averages. We can see the average loss sits around the weekly open, and the average gain is slightly above current price action. I don't have a clean local level marked right here, but if we look back, we can see that previously this was the range low area. So we basically have two local resistance levels, one slightly above current price, the range low. The next one is a 4H structure swing point and a major SR level, where price spent around 2 months before breaking down. So these are strong levels. The second one is stronger because more price action happened there. But we still need to keep the overall range low in mind as resistance too, especially as confluence with today's average move. For me, I don't plan to trade this right now, but if that changes, I'll update. Now for local longs, let's switch to the 1H timeframe. We have a bullish 1H break, and the average loss plus weekly open are more or less in this area. I would mark out the last low candle because it sits right below these levels and was previously support on the left side. If price wicks down into that area, that's a potential spot to look for a local trade, with invalidation below the low. Of course, you can give it some room to breathe, but I'm not sure what kind of reaction we would get if price prints another SFP, because this is the monthly swing low. So either we get a clean SFP and move up, or we get a volatile move lower. I'd assume a lot of people have stops below the monthly structure, which is why I say invalidation should be below that low. So you're not stuck if it breaks lower, and you can try again if a successful SFP shows up with signs of strength. The signs of strength would be simple: SFP of the low, and then a reclaim of the level I marked. Best case, reclaiming the weekly open as well. Until then, this is the first support area with confluence. Whether price goes there first is another question, but of course it would be better because it would be an SFP into support and into an untouched resistance level above. So that would be a solid day trade idea toward the average gain or a new local high. For shorts, yes, price could reject at the first level, but the better area is clearly the next swing high around the breaker. That's the lower high zone and the area above an SFP. So if price moves higher and you see structure starting to shift at the breaker, that's where to look for shorts. If there is no weakness there, then you wait for the next level. Also keep in mind, once price comes back inside the range, if it doesn't reject immediately, then on the retest it can hold. If you're in a short, that's a take profit area. Now let's check momentum on the lower time frames. 12H is shifting up if BTC closes above 77.8K in the next hour. That's a nice sign. It doesn't mean we can't print bullish divergence later if price makes a new low and forms a higher low. But as it stands, if support holds, that favors an up move or at least a range. 6H is shifting up and remains up unless it closes below 75K. 4H is not as clean, but it remains up as long as Bitcoin closes above 76.5K. That aligns with our SR level and the weekly open area. 1H is printing some ugly stuff, so it's not very useful right now. It's basically stuck around the midpoint. So the level for the day is basically this area, or an SFP into it, for a trade. The invalidation I already explained. On the upside, the first level is above the current highs. If we get a more volatile day, these levels can be broken. On a typical average day, the day's average range gives you the first reaction area for scalps or day trades. With that, I'll wrap it up here. And I hope the view and next steps are clear. I can't update every single detail in one video, but step by step, everything should become clear in terms of how I see it. I wish you a nice day, and I'll see you in the next one.